All right, guys, how we doing? Sam here with you. It's Tuesday, July 9th here. We're looking at traditionals today. So per the polling, I was really pleased to see how spread out amongst all the traditional assets that you guys are, as I mentioned in my note. That's really encouraging to see. So we'll just, you guys were all over the board today, but this moment in time, the dollar to the yen was in the lead here. So I'm going to start with this, and then we'll check back and see how the polling looks. Now, I've got the daily chart up here. We've been through this a couple of times. I think this correction has taken on a little more complexity. So this is my current primary count. So you can look at this here, and you can kind of do this. You see, I'm just grabbing some pivots here and just kind of draw this here. Well, this looks like, obviously, we've come up here. Prior resistance has been tested repeatedly for support. But you could kind of make the case here that we're just in a bit of a range here. It's pretty easy to spot this, even if we're using the upper levels here. So essentially, here's point of controls here. We're essentially just going sideways after this beautiful, just spectacular impulsive move higher off of this low that was low was there. So it's from 12. So it's a good 4-year trend. I remember when. In FX, as I will often tell you guys, it's, trading down the 15-minute, that is tough trading down there to do consistently profitably. But when you pull back out, the trends really emerge. You can see what's going on. So as I often will remind you guys, I just strongly encourage you, whenever you're considering any FX pair, well, FX in particular, but damn near any asset, you can get out to the daily so you can see really the bigger picture. Don't get lost in you're looking at a 60-minute, you lose the big picture. And there's a lot to be, I think, drawn from looking out here at the bigger picture here. So I'm going to take these off just to clear up the chart. And I know we can't see over here on the hard right edge, but just for quick review, 4-year trend straight up. Right, just beautiful impulse. Now we're in some sort of correction of that, so just swing low, swing high. Here's our 50. It's been tested. It's a pretty obvious spot where as you just look here and come over and go, okay, well here was all of that trading market acceptance. Here we come down, we test that. All right, it holds up we go, but that is in our low. We didn't come off of this. We didn't get an ABC and go right into an impulse to carry on the trend. So now we have this complexity here. So the Elliott can be helpful here. Having some Elliott knowledge can be useful here, but it's we're now at the point where it's gone on for so long. We've gone sideways for so long here. You're making your best guesstimate is where we are with regards to how to label this correction. But clearly, we've had an impulse, and now we're in the process of moving through that correction. But so we had 4 years here when we pivot was in 15, so damn near 4.5 years going sideways. So these are really long trends here. But what you can see, really, the broader point here is essentially we're going sideways. So how about an Elliott count? Well, it's become more complex as this has gone on and on, because there have been multiple points here where it looked like, okay, here we go. So you can see here from this low, it might have been, if we pull here, where we come down to the golden zone. Yeah, we had some wicks go through. We had this spike go through. You can see here, I've got a set of median lines on here. So this is the Schiff modification, which has caught this just perfectly, right? So we just take the median line down 50%. And that's where we draw across, and you can see this to the tick here. So if this was, as I have it labeled here, as an ABC, so if we're going A, B into the C here, well, you might look there and think, break of the golden zone, that's bearish. We do accelerate off of that after tagging the median line. We rip up, we go to the upper parallel, and then we're back down here to test the golden zone. But there's a little more happening here that I can show you, which is, again, it's always good to get this longer term perspective. So with this set of median lines, I certainly would, while I'm going to take it off here just to declutter the chart for the video, I would certainly not lose track of that. I mean, that's just framing the market as nicely as it could possibly do so. So I would certainly want this. So as I'll often suggest, either a triple or a quad. So I have a daily. I mean, even you could have daily, weekly, 4-hour, hourly. That's a very common setup. But I would not lose track of that set of median lines. Now, the one interesting note here. So I'll just clear things up here a little bit. We'll work with that. We can leave that one on there since we haven't violated that. If we just do our standard algo play here, looking for, well, what did the algorithms do last? Well, if I pull down here to this low here, look how many times this golden zone gets tested. This is just absolutely was about as good an example as I could put in front of you. So here's the swing. We go golden zone. Well, we're actually using a pivot here, but it is kind of interesting because it would have been very close to the same thing here. So 1, 2, right now I know that's behind the pivot. Well, so you can just see it. If I take this off and go back one, we're still right at the 618. What's the difference? We go into the golden zone or just tag the 618. So here we come up after this low is established. So I'm pulling from this low up straight, not to the 618, into the golden zone. Now here on a daily chart, that's bigger than it looks. We go in just enough to get in. We tag the 65. Tag the 65. What do we do? Right? That's about as good as anything I can put in front of you. All right? So we get so you note here we got two things. So we have the corner pocket realizing it's 80% as we hit a perfect tick to tick algo play right there. Right, and as I will remind you, this is happening in every asset class on every time frame. This algorithm is always there. Right, so here we go. Boom. Just so you wonder, why did it break the 65? So you're looking here. So, see, this is why you have to know this. You have to draw it from both sides because you're looking here, going, oh wait, I think we've had a swing. We're come down. We're at the golden zone. Well, you got to know that there's competing algos on both sides. So this algo wins the day. Right? So we come down, we break the 65, so the algo that was there is stopped out. This guy goes down just enough to break. Now, you tell me if that's coincidence. Right? We're tagging the target as we tag the median line. I'll leave that to your own conclusions as to whether or not you think that's coincidence. I can assure you it's not. So now so from the tag of the median line and the target, what do? Right back to the golden zone. Then what do we do from that golden zone? Right back to the target. I just think amazing, right? So I mean, I don't know how anyone trades without this. I don't. You're just absolutely blind to the market. I don't know how they do it, honestly. 1, 2, 3. We test. So we've tagged. 1, 2, 3, 4, 5, 6 times. We're into the golden zone. 2 perfect to the tick targets. Tagged here. So where are we in the count? Well, at this point, because this thing has just gone on for so long, now I got to take this off here, just clear up so we can get into the Elliott count. I've had to revise this here because we don't break out of this sideways range, but I think our best bet here, or at least, I mean, I'm sure it can be counted a couple of different ways. But I have the ABC going in here to give us a W, then the ABC of the B is a little funky to give us the X wave here. But so that WXY would have a target down here. So we'd have this Y wave down. We can just we'll throw it down here at the golden zone. Right? Why would you assume anything other than the golden zone? Right? We certainly would want to pay attention to this. If big if here we're going to come down and go lower. But note within that WXY, we've got an additional WXY going on. So we get from that, it would appear that we go A, B, C to give us, as we tag the median line, to give us our W at a lower degree. Then we go from that W to the X. Now it appears that we have just gone A, B, and we're seeking the C down here. That's how what it appears at this moment in time. Now we're going to get in here and see if we can substantiate that based on the current price action. Come here. All right, so so we got a couple of obvious targets. So the 50, a revisit to the 50, obviously. We've got if this is going to take longer, we don't know how long this is going to take, so I'm just kind of eyeballing here, but I'll use the median line here. We'll use it as a reasonable target, right? We tagged it to the tick. Again, why would you assume anything other unless something happens, right? We start to break here. We break well beyond this. Well, now count changes. Right? It's often the case. Counts are dynamic. They change all the time, just as the market reveals itself. So let me get this off of here so you can see. So from that WXY, the lower degree WXY we're trying to complete is here. We're trying to get that to complete. Okay, so ABC into the W. Here's the X. Now it looks like we've gone A, B, and now we're trying to finish down here, but it doesn't appear though. It doesn't look like we're getting our impulse. So I'll show you what I mean. So I'm going to go from the daily down to the hourly. Now this is a bit of a judgment call, and there will be some ways that we can quantify this. So as we come down here, there's a clear impulse here. So 1, 2, 3, 4. We get a little sideways in the 4, and then we come down, we finish at the 5. Well, you want to go 1, 2, 3, but it doesn't look like that's what we're getting. So while it's technical, so we can look here, sorry, we can go the length of the A. So again, right, you know, if you guys are wondering whether this algo is in FX, I mean, this, yes, yeah, it is. All right, so that's why I like FX so much. So from the 50, so just textbook, guys. It's like I've shown this so many times. This should be reflexive. Like it's the first thing you're looking for. Screw the Elliott Wave. What did the algorithm do last? Right? If you don't want to go through the learning the Elliott Wave, that's fine. You don't need it. Yes, I use it. It's in every video. I talk about it constantly, but it's not essential. What is essential? Swing high, swing low. Where's the 50? Where are the targets? That is essential. The Elliott Wave, now, I hope I can demonstrate to you how it can be helpful, but people get really caught up in it, right? They're just, I don't know what it is. They think it's a magic bullet. It's not. It's just a way to try and organize the chaos, as I'll often describe it. And we're just we're trying to organize what's come prior to where we are now. What's the probability? That's all we're trying to do. So from the impulse down, you know, you want to go 1, 2, 3, but it doesn't. Now it still may go that way, right? So we've got the B wave here, so we're looking for 5, but it doesn't look like we're getting it. What it looks like we've got here is another ABC into another A wave. That's how I would identify it at this moment in time. So now, could it turn into the 3, 4, 5? Yeah, it could. But it doesn't. It's not shaping right. So let's look at it this way. So from the length of the first motive down, in this case it's an impulse. From that impulse to our, you know, here we got a 2-tick front run on the 50. So we look here and we go, all right, well we're through the 100. So it qualifies. It qualifies as a third. It's long enough. You're not in your high probability zone, but technically, I mean, we're longer than the first wave, so it could play out that way. So we certainly have to make note of and pay attention to what could be either the A or the 1. So if this is going to be 1, 2, 3, well, we got to pay attention to the 4 if we're going to, because we've got impulse followed by 3 followed by impulse. So hard pressed to see this as a diagonal. So if this is going to hold, okay, let's get this off here. All right, so I've got this, everything's on top of it. All right, so you can see this is a critical pivot. Now look at the volume profile. All right, look at that. All right, so you can always spot it. Right, pull over here. We do not have market acceptance here. What do? We pull right up to the edge of it. Now that doesn't mean we can't get through it, but that's an area like that's screaming at you. Oh, pay attention here. Something going on here. 1, 2. So if this is 1, 2, 3, which I don't love, but it still could be. If that's 1, 2, 3, we're going to pull from the B wave. It's either the B or the 2. I should put that on there because this is a possible alternate here that we've gone 1, 2, 3. We're putting in the 4. We're going down for the 5. Now let's match the degree here. All right, we'll put that in. We'll put that in white. Okay, so possible 1, 2 could be the 1, 2 could be the AB. Right, this looks like it's complete. Now the third, take note here, the length of the 1. Get it right on that pivot from the 2. All right, so we don't quite make the 1618, but we certainly qualified, and then we get, it appears we get an extension in the 5th. So then we got 1, 2, and then you can see, well, so actually it looks like 1, 2, 3, 4, 5. So it looks like the 4 could be over a test. So we had just, looks like we've got A, B, C. So we, it really doesn't matter at this point how we identify this, but certainly that's very characteristic of a 4. We get some sort of a sideways triangle here. So let's go with that 4. And then coming down, 1, 2, 3, 4, 5. Can't miss that. And we come right into the, let's get this back here. So we're right to the 38 of the larger degree. Let's see, let me pull back to the 4 here so I can get that in context. All right, so here I'm going to take this off because it's kind of polluting things up a little bit. Okay, so let's go back to that 1 hour here and just see if there's anything here for us to work with. Okay, so if this is the 4, well, 1, we're a little hot for a 4 to be that deep relative to the 3. Now, technically, right, still very, very much qualifies, so we can see the ABC going in here. So let's get that degree down here, and we'll go back to yellow. All right, so ABC, does it look like we're done? Yeah, it looks like we might be. So it's a bit tricky. It's just the symmetry is not great here. So it looks more like an ABC has finished. Now, if this starts to head back down, we're going after this algo target. Again, does it matter to us if you're just trading off of the fact that we're in the sell zone here, right? We are clearly in the sell zone. So from this pivot, we're in the sell zone here, but remember, we got to consider all the way. Now, from the all the way, if this is going to be if we're going to end up with a 5 wave or a motive wave coming down here, well, we want to check both. So the 2 to the 3, yeah, we want to check that, but from the swing high to the swing low, if this is going to creep higher, right, and we're going to get over this 1, now we're kind of leaning more into the ABC idea, and that this would be at a larger degree. Perhaps we've got another A wave here. Remains to be seen. So in terms of how this resolves the Elliott count, there's no easy call here because we want it to be 5, but it just, it's just call it just years of doing this. It doesn't look right, right? For this to be, well, we'd have to do it this way. So if I connect these two, I'm just going to grab this, go here to my 2. That would looked a lot better here, right? So if we had gone down, done that, then it feels better, right? So ABC, there's the C, that would have been from the 2. This would have looked much better here, right? So we're coming up here, we're at the point of control, we're at between the 38 and the 50, perfect spot. We don't threaten the 1. That would have been perfect. 1, 2, down. That doesn't happen. But that's the structure that would have been more appealing to the idea that we had a 3, 4, we were going down for a 5. That looks right. Right? There's a look to it that just over time you'll know it doesn't look right. So right now, while it still could end up that way, this, right? Once we got here, it doesn't look as good, right? It doesn't look as good as a 4. If this is going to be 1, 2, 3, 4, now it still can. Now, so one thing to keep in mind here, we do have some news coming. So if you're pondering this as a potential short, you got to be a little careful about the timing here. So first thing you got to do is we got to put an alert on this line here, right? So as it relates to the low volume node here, so I'd be putting an alert on that. If we break above this, well, that idea that we've got an impulse going in. Turn that down. The idea that we've got an impulse going 1, 2, 3, 4, we're going down to finish the 5, that falls apart, right? And we got mighty damn close to it, but it held, right? Again, no coincidences in the market. So the fact that we hold here. Interesting. So what I was trying to get to, well, we might as well check the oscillators here. So a little drop off in volume. It's just some divergence in the RSI. But as relates to putting on a new trade here, with the idea being that you're looking for the short, which the longer term count supports that idea. Well, we got to pay attention to the news that's coming here. So we've got definitely some market moving events. So we've got Powell speaking. Well, he's already spoken today. We got him speaking, and then we got the the FOMC meeting minutes coming out Wednesday at 1 o'clock, and then Powell testifying at 9 on Thursday. These are, and then PPI. So anything that affects the dollar is going to affect this spread. So you got to be careful about the timeline here, always with FX, right? It's hypersensitive to the latest report. So you got to be careful about that. So if you were looking for, on the idea here, okay, we held the pivot, that's tradable. That's certainly tradable. Now, so one thought is you let the volatility that is likely to come as a result of the market minute, the meeting minutes, and his testimony. Maybe wait for that. So you think, oh shit, man. Well, what if it's it starts to sell off here? Am I going to miss the trade? Well, yeah, you might, but I don't want to use the word conservative. The more thoughtful, how about I say it that way to approach this is if you get it starts to come down, there will be, inevitably, there's a point where there'll be some profit taking and likely a little retrace. Now you have better circumstance here. Now this is what you're looking for, but you can clearly identify where you're wrong. If you're selling it here, I mean, you could definitely sell it right now with a stop over that pivot, because that invalidates the count as it currently is labeled. If this is going to be 1, 2, 3, 4, well, we can't overlap that pivot. So there is definitely a low risk entry right there. Now, right, remember, there's always an algorithm on the other side. What just happened there? You think it's technical in here? All right, so we've gone from the daily to the hourly. Does it change? Is the algorithm gone? Is it different? Nope. Same. You could be down at a 10-second chart. I promise you that algorithm is going to show up. Okay, so we've got a completed algorithm play at the first target to the tick, just in front of the wave 1 low. So this is very tradable here, but know that you're going to take that into the volatility. So if you get what it often will, you'll get this kind of shit around a report of that nature. So it's just everybody gets blown out on either side. So my suggestion would be let that, as tempting that, well, shit, FX, you could take something small here. You're kind of rolling the dice here that whatever he says we're gonna drive the market back down here, right? Anything he says about the where we're going with rates is certainly going to be impactful to the dollar, and anything spread to the dollar. So just keep that in mind, but that's very tradable. You can put on something small there. And if you got the initial, if you got through the volatility without getting stopped out, right? And stop has to be right here, has to be at that pivot. If you got through that and you got the acceleration down and then the volatility came back but didn't take you out, well, then you got a chance to maybe add, looking for something along those lines. That's how I would do it. I wouldn't want to put anything fresh on, of any size, going into that, knowing that that's coming tomorrow. I'd wait a little bit. So let's get through that volatility and then see if the market offers the opportunity. Sometimes it just won't offer it to you. It won't be available. So this not unreasonable to think we'd come down and test the edge of this channel that shaped the move down, right? I'm just using the market, right? So you see I'm connecting 4 pivots. 1, 2, 3, 4. So for this to come down here and test this from if it's going to come down, that's not a bad place to be looking for a bounce, and then you're looking for that. And you're going down. Now if we get that, well, now the 5 completes. Right? So now you've got the full Monty here. 1, 2, 3. Even though it was a little suspect, it went up. It would be just perfect. And we come down and we finish. Now, if we finish there, where are we? Well, let's pull all the way back out. Let's go to a 12-hour. Right? Could that complete it if we finish right here? Well, first thing, let's remember where we started the day, just kind of drawing up this support. Wouldn't be the craziest thing I'd ever seen. Now, this set of median lines, while I want this somewhere, I might move to my shorter term and draw a different one. So I might go to the 4-hour. Let's open this up. If I can draw median lines, I always want to. Sometimes the movement fits a channel better. So as you can see it here, this would be awfully skinny for a set of median lines, but a channel nails it perfectly. It's not that one's necessarily better than the other. they're both, you know, terribly effective, but so it's just my personal preference here, because I can create a channel with just a modified shift. So I might do it that way. But from here, I'd look at the pivot here to this pivot right here. Okay, let me clean this up a little bit. Let's get that one off, because that has already realized. So if this is gonna get all this off here, I'm kind of polluting the screen. Okay, so, and then let's get the channel off as well. Okay, so from the two, what do I have from the two? All right, if I draw this up, I have a potential here, it looks like, right? If this pivot holds, I have a corner pocket, not a golden, just a straight corner pocket. So the assumption, if this pivot holds, 80% probability of making the median line. Look where that lines up. Now, wouldn't that be interesting? So would that finish us? Yeah, it could, right? 1, 2, 3, 4. That could, I mean, if you're going to put a roadmap on somewhere, that seems like a pretty reasonable target to put on. That would give us the 5, but we'd be a bit short of what you're anticipating relative to the larger degree count. If this is A, B, right, and we're going to finish the C here, could it happen? Yeah, of course. Right, this was that crazy wick, right, where we had that essentially a flash crash. So there's no, you can see it in the market profile or in the volume profile. There's no, I mean, this happens so fast. There's nothing there. So if this starts to go, there's really not much support. Right? Well, let's pull back out to that 12-hour. So you don't necessarily looking at that as a target. That's not necessarily where the market turns around and then we come out of here and we're off to new highs. But certainly it would be a target as a trader. That would be a pretty nice rip. So if you could get this corner from 108 down to 106, 2 full points, you know, shit, that's a nice little trade. But now, would that necessarily finish us? Well, not necessarily. Because if that's going to complete, if this is going to end up being a motive wave and we're going to get a 5-wave structure, well, nothing says that we're done there. That could just be the 1, we go into the 2, 3, 4, 5 of the whole thing completing at a larger degree. And that symmetry would be a little bit better relative to this WXY, right, of this at this degree. Right? So this would be trying to finish that from here. Now we're getting back towards the larger degree. Well, look here. This could be interesting. Right here, the whole thing. Well, that's our alternate here. If this is going to play as an ABC, potentially the whole thing finishes right down here. So we get this overlap here. So that's 100, and so this is at 108. Now that could take years to get there. Years. Right? You prepared to wait that long? Were you willing to wait for 6 years when this thing was going up? Or what was it, 4, 5 years? You know, from this, once we had the 4 and it went up, just from the 4, that's 2 years. That's a 2-year 5. Could you wait that long? Not easy to do. Right, but that's why you want to have this longer degree, this kind of roadmap saying, well, where could this be going? If this is going to complete, and again, just, you know, looking at the structure here and the geometry of the market, coming down here to revisit this median line at 100, you know, it seems like, oh shit, man, that's a long. Really, we're going to go 8 points lower? Well, you know, what were we here? 114, and what did we go to? 104. 10 points there. So it's not crazy to think that we could go, well, from here it's 8 points from our retrace, that we could get another 8 there. That's not unreasonable at all. And then you put that back into the big picture. Where is that putting us? Okay, let's get all the way back to the low from the impulse. How does all of that line up? Where would that put us? Right back at the 50 and the median line. Right? That might be something to consider. All right, so this would be from 15. If we hit that target, that's going to be 19. So another 4-year correction. So we went from, what did I say, from 11. So we had 4 years up, 4 years down. Look how that all just kind of starts to make sense. Oh, okay. I can see. So that's why you gotta put everything in context. You gotta pull out to the big picture, because we're down here going, "Fuck, man, I gotta wait 4 years for this thing." I mean, you don't. Of course, you don't have to. But this is how big money is made in FX. This is what they do. They're not down here on the 15. Well, shit, right? I'm just the large traders, who's trading in here? Who's trading? Who are the whales in FX, right? These are banks and hedge funds. These guys, they'll sit with something for 10 years. If it's trending and it's in sync with their models, they'll stay with it as long as it's consistently in sync with whatever they're projecting. So there's no reason for us not to come out here. It's our impatience that works against us. Right, from that low, once you had the 2, could you wait 4 years for that impulse to complete? It's not easy to do. I'm not saying this is easy. I'm not saying that I bought that, and that's not what I'm saying. I'm just trying to show you this is in FX. If you want to see some big years, step out to the daily. I often tell people that are new to FX, trade nothing but daily. Just start there. There won't be as many trades, right? So you're not over trading. But when something like this sets up, you got to be there, right? I mean, you waited 4 years to get that confluence, right? So don't miss it. All right, guys, I kind of went long there. All right, back to you in a bit.